You can go.
Okay. Hi, everyone. This is Dale Pinker to TradeGATEHub, and let's start this week off with how are we going to approach the FOMC this week. And the dollar is coming off a little bit, being led by cable. So my strategy is pretty much related to what Euro does. So as you can see on the ECB, we had a false breakout out of this falling wedge, kind of a stop hunt, took out the buy stops here, couldn't quite get to here. Today's lows are important because you have both of the 2-hour 50 and 200-day actually meeting right at this level under today's lows. So my preferred scenario is for, just like the Euro took out the stops above the market, at least temporarily, to see if the market could take out the stops underneath the market right here. So even though the dollar is weaker, something I did point out, and this is happening right now, is looks like we could be getting a failure in gold. You know, you could sell the rips and be wrong over 1815. It tried it earlier in the day. But again, what I would look for, and you know, what I look for and what happens sometimes are not the same thing. So should we get one more low to clean out sell stops under the euro into the Fed, I don't believe we'll get a new low in cable because cable is already, you know, in this corrective bounce that I think could head up towards maybe 140, 39 and a half. So I would assume that if we had some type of new low in the euro, which, you know, there's no guarantee this could be the bottom, but should that occur, I don't think you'll get a new low in cable. You know, maybe we'll pull back some type of fib retracement from here, from this 38 level. So round numbers, let's call it, you know, 36, 38, and maybe we'll have a chance to buy it at 137 to 6.5. Should the euro give up the ghost and take out recent lows, you know, this low right here, 117.54.4 was not lower than this is 1751. So I will say this, that I believe a lot of longs have their stops under the 1751 level, and that's plenty of liquidity. We'll see if the HFT traders, algo traders, can pass up that liquidity and we just break out. And what would that be? I'd say next time we start trading over 1810, 1820, that the euro's coming out to the upside. But as you can tell, the rally and the magnitude of the bounce between cable and euro are almost like two different stories. So my game plan is to use euro weakness, and maybe we could break if we take out 1750. Could break towards this 117 level, which is a pretty important level. In fact, here we are. So here's your 117 level, 116 and a half. Clean out these stops because I am looking for a pretty good bear market rally in euro and a pretty good pullback in the Dixie. I thought we might make one more push up towards this 94 and a half before that happens. Everyone's expecting Powell to come out with what's happening in Delta to give him rationale for, you know, being a dove again on this FOMC meeting. And, you know, that's possible, but he could surprise people by making a balance statement, or you know, with the market at all-time highs, even be a little hawkish without a lot of serious damage taking place. So I'm going to be patient and see if we get one more rally high. As you could tell in the dollar, it's kind of wedging up here. If you just look at this formation right here, let me move me out of the way. So you kind of have this happening here. And that would extend up towards this 93 and a half level if we had one more push up. So that's what I'm waiting for the Fed. It may not happen. Dollar's weakening pretty good here right now. So we'll be monitoring that. Japanese yen, maybe we get a third drive up here. I know some people still looking for 107, and perhaps we're starting from here at the 1060 level. I'm going to see, just like if we have one more bout of dollar strength to the 93.50 level, I want to see where that takes the yen to set it up for a short, because I think something significant did happen last week, even though yields are a little softer. I think yields bottomed. Okay, so um, a lot of people when we're up here were saying 2% or higher is a layup, and I had this blue speed line drawn for quite some time. It actually undercut it, but could not close back underneath it. And look at the action we're getting today. They tried to sell off yields moving lower, and they're coming back right away. So I think that eventually we're going to break back above this 148 level and trade above 2%. I think there's a fairly high probability that the low that we had here at the 113 level is going to be it, and the next wave is higher in interest rates, which should continue to pressure gold. Okay, so gold, what we need is the close under 1794, and if that happens, I think we could test these lows at 1750. I'm actually looking for the low 17s on a break of 1794 eventually, but this is a $40 formation. So you have to wait for candles to close under this line, not just intraday trading. A candle, you don't know where a candle is going to close until it what? That's right, until it closes. So closes under 1794. I think you could get the edge, 1710 shorter term. You look at this number, and I think that you could protect shorts if you take it today with stops over 1815. Because if we start taking out this sideways channel downtrend, this almost looks like a descending triangle, head and shoulders above 1814. I would stand aside from shorts and maybe even consider longs. Same thing in silver, looks to me like a bear flag. So here's your flagpole, right? And we're getting some type of corrective sideways action that could lead to something like this when we have a breakdown in silver under this flag line. So I remain negative. Precious metals, not long term, but just over the next several weeks or months. And I think they have to clean out more of the bears, as I've been saying for a long time, even when the silver was up here at the 78.6 level, that I think we're going to go for these stops down here. And my back up the truck number for silver is going to be around the 22 to 21 level. Just a quick look at what's happening here in oil. So oil pulled back from this recent high, and this moving average is containing the oil. And I wouldn't reach for this after almost an $8 rally, after a $13 decline. I think we're going to enter a corrective period where we at least retrace back to about 69 to 68, and at that point I'd be interested in looking at the long side of oil, because perhaps we're going to get one more high. But for now, I think we're in a corrective period here. So that brings me to Canada. Okay, so Canada, after the big sell-off, look at this. It's really it's like it was in a car wreck, and Canada is in shock. And I think that we're going to have long-term buys back down here around the 123 level. And this action is pretty negative. As we're talking, the euro's starting to come out of here. And I said the preferred short would be Swiss. So um, the dollar may not work according to my plan. We're getting a pretty good sell off here at 92.60. So here's a lesson. Okay. So, uh, my view and what I was going to do was based upon perhaps one more low in the euro. And if that's not going to happen, I have to adjust to it. And it looks like the euro is going to attempt stops here, but I'm going to be patient and see what happens. See if we do end up with a failure over 1830. I think you have something pretty good going, and I'm not long the euro. I'm not short the euro. So if I miss a trade, I do believe though if we are heading up from these levels, that the next best big short coming in euro will be above the 119 handle. 119.30 to, as you can see, 120 is a very key level. I'm not sure we'll get that far, but up here you have major sales. I still think that the euro, whether we're turning up right now and breaking out and we get a recovery, that your long-term buys are still down around this 114 to 113 level. So even if the dollar is correcting here from last week's highs on this wedge, I'm not looking for more than like 91.40. So that's another 120 pips. And then I'm looking for a continuation of this move that we had here, something like that from here. So we'll see. It's definitely looking like the dollar is rolling over. Um, I'm going to be patient and see if the euro can pull back one more time. It's still way underperforming the pound. So flat and waiting for the Fed on that. Regarding stock indexes, here you go. Here's a news flash. Last week and the week before, after the reversal week we had last week, I was very surprised. I was looking for retracement moves in both stock indexes in NASDAQ and S&Ps, and here we are at new highs. As you can see in the S&P on the 4-hour, we're not confirming. On the daily, we're not confirming. Even on the NASDAQ, tried to blow out the divergence, but hasn't yet. I know some people have targets up around 44.34, and there's even some bullish targets up around 4,500. So we'll see. Not enough for me to abandon my bearish position, but not enough confidence to add to it here either. So here we go looking at the VIX. Again, I think the VIX is trying to bottom. It's accumulating because look, we're making new highs in S&Ps and NASDAQ, and the VIX is not at 14 and a half. It's at 1835. So it's still my belief that the VIX is under accumulation. Buy breaks in VIX products and even, some deferred option calls might be okay. I don't think we're going to see the 14 level again. That's the way that looks to me. And here we go. The Swiss is starting to roll over here. That's a negative day. So off the gun, I did not get short the dollar, and I'm not going to chase this thing today. We'll see what happens if the Fed can generate one more push in the dollar and one more sell-off in Euro USD. And gold up here at 1803. I'm going to look for turnaround Tuesdays to possibly do something on the short side of metals. And I do believe that uh, we are most likely have topped or one more shot up in TLT for a 3. But it's something to keep in mind that we're heading into the dog days of summer, right? And with that happening, volatility at times does dry up. So be careful. A lot of people are taking vacations, so markets do thin out. And that might just be the appropriate time in August for some type of bear raid in equities. But everything's dependent upon what Powell says in the Fed meeting. And so trade lightly. It's a major red event, and you don't want to get too aggressive in front of the Fed. Moving over to crypto, I showed this wedge that we were breaking out of last week, and that I was no longer looking for 26. So you see this wedge. Okay. So we never got down to the 26 I was looking for. And then last week I said we're starting to break out of this and it's looking pretty good. I can't short it here. And I'm not a big crypto trader. It's a little bit too reflexive for me. And the spreads at times could be difficult. I'm just not a crypto trader, but I provide my technical view to give some guidance on areas for people that do. So taking a look at the euro again on a 15-minute, looking pretty strong but diverging. Aussie is another one that is not making a new low. I would love to see one more pullback in Aussie to about 73.20, it not make a new low, and buy it for this dollar correction. So we'll see. Coming into Monday, dollar's lower, almost sharply lower, and on the verge of breaking this uptrend here. So this correction in the dollar may have begun and may have begun without me. That's okay. I still think the major trend is going to be a buy in the dollar index around this 92 to 91.40 level. So I invite everyone to come to our platform, TradeGATEHub.com. I'm going to have an interview with one of our best stock traders here, Michael Venezia, on Thursday. And Mike posts every morning. If you want to learn his methodology, he's really curates a great list on Twitter and all the other financial sites, along with his experience. If your interest is in individual stocks, you may want to look at Mike's methodology, and we'll get into it live on Thursday. Just not much to add in front of the Fed right here. So we'll see what happens tomorrow. And remember, don't just count your pips, count your blessings. And we'll get an update on what's happening with the currencies and the gold market. Again, my strategy coming in from the weekend trades that I planned was to wait for one more washout in the euro down to about 117, 116, and then look to buy cable on a pullback towards 136 or so. We've rallied about 240 pips, so some type of fib retracement, and this is what I am looking for. Euro makes a new low. Okay, acting like that may not happen, but it still can. Everything and anything can happen. And buying a pullback in cable down here around 136, 136 and a half, where it turned good here, because then you'll get your first rally up in euro that I think could take us up towards, this above the 119 level, 119.30, max 120. So those are my calls. That's what I see today. Um, I do think that the dollar is due for a rest. The question is, has it started from last week, or can we generate one more rally up towards this 93.40, 93.50 level? And as in everything in life and trading, time will tell. So good hunting, everyone, the rest of the day. We'll see how this day finishes. And uh, one thing you have to keep in mind, you could come in with a plan from the weekend, and if it doesn't happen, if you don't learn how to change your mind, you won't have any change left. But it does pay to be patient. And if you miss trades, that's okay. And you know why? There's always another one around the corner. So don't be an impulse trader. Trade your plan. And if your plan doesn't come together and something starts prior to you being able to execute a trade in it, just be patient and things will shape up and you'll be able to take a look and reposition yourself in a few days after things reset. So this is really the story of the week. As the dollar peaked before it got to this resistance, has the euro bottomed before it got to this support, or are we going to challenge it one more time? And if you put a gun to my head, I'd say that this is pretty good action in euro. even though it's way underperforming the pound as expressed in euro pound, which I still think is heading lower. This 85.40 level is trying to hold it, but I'm still looking for lower numbers, which makes the pound your preferred long and euro your preferred short. So good hunting the rest of the day, and I'll see you guys tomorrow. And feel free to come in and ask us questions about our analysis. It's free. Again, the website address is tradegatehub.com. And this is Dale Pinkert signing off for the